Welcome to Triple A Professional Institute. Today we shall be taking tools for financial analysis. And for today's class, we have only three topics that we want to talk about. The first one is the common size financial analysis. The second one is trend analysis, and the third one is comparative financial analysis. Straight away, I will start with common size financial analysis. Common size financial analysis. We shall be using a case study of 2019, May 2019 case study professional exam as our illustration in this class. As you will see displayed on your screen, we have 3 years for this case study, and the title of the case material we are looking at is the Spicy Restaurants Limited. That's the title of the case material that we are looking at, that we want to use to analyze, to talk to us on how to use common size to analyze our financial statement. Okay, now when you say common size, what do we mean? For some of us that do not that is not familiar with it, common size financial analysis is used for each of the years. For example, in this material we have 2016, we have 2017, and we have 2018. These are the 3 years that were put under consideration. And now let's say we have revenue here, revenue here. You have an amount for revenue which is 254,299. Okay, 193 here, 193,379, and we have revenue here. We have 170 here. Please remember, everything here is in thousand. Everything is in thousand here. So, all right. Now, common size is saying that all items under the income statement must be prorated using the revenue as the denominator. All right, that is, revenue is taken as the denominator, and you base all items in the income statement on the value, the total value of revenue. That is, this is taken as 100%, this is taken as 100%, and this is taken as 100%. Okay, watch. If this is taken as 100%, it means all items in the income statement will be based on this. That is, let's say for instance that your examiner is asking you to look at say the admin expenses. That what is the value, what is the performance of the admin expenses? Let's say admin expense. So what is the proration? Admin expense under 2016 is 57,048. 57,048. To do your common size analysis, this is what you're going to do. Common size analysis, you're going to say description of the item, bring it down, then you do your proration like this, then this is your percentage here. Let's say the first one we're doing is admin expense. So whatever, this is how you're going to do it. Now you now say admin expenses divided by 254,299 multiplied by 100 all over 1. Now whatever answer this gives you, you will bring it here. For 2016, 2016. This is 2017 percentage, and 2018 also percentage. All right, so you look at it in this manner. We have done the one for 2016 here. Let's look at 2017. 2017 is 2017, the value for 2017 admin expenses is how much? 41,786 divided by what is the value of the revenue in 2017? 193,379. Okay, multiplied by 100 all over 1. Okay, so this is the way you keep analyzing it. Whatever percentage this is giving you, what figure do we have here? I think this will give us about 0.22, which is 22%. 22% here. Then how about this one? This is 22%. This one is 41,786 divided by 193,379. 21.6. That is admin. Now we'll look at the one for 20. This is 2017. This is 2016, and we'll look at 2018 now. 2018 for admin expenses, we have 44,295 divided by the total revenue for the year, which is how much? 170,000 multiplied by 100 all over 1. What figure did it give you? 26. This is 21.6, and this is 26%. Okay, 26%. All right, so we are done with admin expense. This will happen only if your examiner calls your attention in your case material that you should check the performance of spices as regards its admin expenses for the given years. This is how you're going to analyze it. Okay, let's take another example. For instance, another thing that, let's look at the finance cost. Let's look at finance cost. Finance cost for 2016. Finance cost for 2016. Let's look at it together. Finance cost for 2016 is how much? 1,185. Divide it by what? Divide by total revenue for 2016, which is 254,299. Multiply by 100 all over 1. Will give you how much? For 2017 will be, let me just write this out once and for all. 2017 will be 891 divided by total revenue is 193,739 multiplied by 100 all over 1. What will this give you? Let's ask this one first. For 2016, we are talking about finance cost here. Finance cost. Finance cost for 2016 is how much? 0.46. Yes. That is 4.6%. All right, so that's 4.6%. Now, how about this? 891 divided by 193,739. 0.45. That is 4.5%. Now, if you check your case material for finance cost in 2018 was nil. So there is not going to be any percentage given to you that you will go to get under 2018 for finance cost. Okay, we are taking 2 examples. Maybe I should just take one more for clarity. Take, for example, the okay, let's look at the tax that was paid. The tax that was paid, tax for 20 tax paid in 2016. 2016 tax was 30,580 divided by the total revenue, which is 254,299 multiplied by 100 all over 1. This will give you a particular percent. Let's look at 2017 also for tax. 2017 tax was 26,364 divided by the total revenue also. Now, what do we want to bring out here? Everything must be prorated over the total revenue in the income statement. That's what we want to bring out here. Everything must be prorated on total revenue in the using common size financial analysis. Okay, so what figure do we have here? Let's just quickly finish this.
12%.
This was 4.5%. Sorry, 4.5%. So this is 12% here. So you bring the tax paid. Tax paid for 2016 was 12%. Okay, no, 12 because there is percentage here. Now, how about 26,364?
13.6.
Okay, the answer of this one is 13.6%. So we have 13.6% here. Let's check the one for 2018. 2018 tax was how much? 21,837 divided by total revenue 170,000 multiplied by 100 all over 1. Okay, give you how much? 12.8%. Okay, we have 12.8% here. Okay, this is not here. But remember, watch your notes very well, because this is where students used to get it wrong. Now, watch your 2016 figure for tax. It was a negative. Please, let's come back. Whatever figure you are getting, it must be what? Must be in that way. Okay, now let's come back to why common size financial analysis. Why do you need to use, why is it important for us to use common size financial analysis? It is important for us to know the proportion of each of the item on the amount, because the whole essence of business is actually the sales we are making. So what proportion of revenue is the admin expenses? If you want to write your report, you just write that in 2016, 22% of the total revenue was used as admin expenses, but the figure dropped into 21.6% in 2017. However, the figure skyrocketed or increased in 2018. Now, for every business owner, they will know that it shows their performance. It shows the movement, how the movement went using revenue as their basis. Okay, I hope this is clear. That is common size financial analysis. You can use this for several things. You can use any of the items that you want. However, the way just they ask you in your requirement. Okay, this is on income statement. Let's go to the what's it called now? Statement of financial performance. Under statement of financial performance, you're going to use, just like the way you use total revenue here, you're going to use your total assets as your what? Your total asset as your denominator, as your basis.
Statement of financial position. You're
Going to use total assets as your basis to measure performance. Total asset under statement of financial position. Okay, but in statement of profit or loss account, income statement, you use the revenue. But in this statement of financial position, you're going to use total asset. Okay, for this case material that we're considering, what was the total asset that was given to us? Okay, let's trace it. The total asset here was that's non-current asset is this, current asset, current liabilities. Okay, the net asset is what? 106 for 2016, 395. Then for 2017 was 111, 330. Then 2018 was 108, 922. Okay, so these are all right. So for this case material, they gave us the non-current asset and they gave us the current asset. Now, like I said earlier, you must use the total asset. So students must not make mistake to use the net asset using common size financial analysis. That would be wrong. We're supposed to use the addition of non-current asset plus the current asset, and that gives me this in 2016, this in 2017, and this in 2018. Now, this is what we are talking about using common size financial analysis. In your statement of financial position, the examiner will ask you to use any of the items. They can test you on any item. Let's take for instance our current asset. Let's say current asset. Current asset in 2016 was how much? Current asset was 4,125 divided by total asset, which is 141,052, multiplied by 100 all over 1. This is for 2016. For 2017, we have how much? Current asset. We have 5,516 divided by the 139,945 multiplied by 100 all over 1. Okay, now what will this give you?
2.9.
You now come here, you write current asset. Current asset gives you in 2016 gives you 2.9. Okay, in 2017 this is 2.9%. 2017 is how much? This is 2018 current asset is 6,183 divided by 132,879 multiplied by 100 all over 1. Now this one is how much? 3.9%. That is, their current asset increased from 2.9 in 2016 to 3.9 in 2017. I hope this is clear to us. Okay, so let's write it here. 3.9%. In 2018, how much is it?
4.6.
This is 4.65, right? Percent. Okay, so we have 4.65%. Now, friends, what does it mean to you? It means that the management of Spicy Restaurant Limited, their management of their current assets it was increasing. There was this steady increase in the management of the current asset. It moved from 2016 2.9 to 2017 3.9, and 2018 it increased to 4.65. Okay, but you cannot actually judge this financially. You cannot judge this ordinarily without comparing it with something. You have to compare this, and the twin sister to this is actually what? The current liability. You understand it? So that is just that. I think with this we should be okay with common size financial analysis. We appreciate you and want to thank you for your patience. Try and subscribe to our channels for wider coverage and for you to keep enjoying some of our videos, the subsequent videos. We appreciate you. In the next class we shall be talking about the trend analysis. See you there. Thank you.